Today, the Trump family's World Liberty token falls sharply in its second day of trading. Gemini looks to list 16 million shares in its U.S. IPO. And Bitwise's head of research breaks down the asset manager's new report on Bitcoin's long-term outlook. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies are mixed and U.S. stocks are lower to kick off the new month of trading as investors weigh the latest developments on the trade front. As of noon Eastern, Bitcoin rose less than 2% to under $111,000, and Ether fell more than 1.5% to just under $4,300. At the same time, the price of the Trump family's World Liberty token fell more than 13% since yesterday, according to CoinMarketCap. That's after falling sharply in its first day of trading yesterday. Now, the tokens weren't tradable when first launched in September 2024, but investors voted in July to change that. World Liberty's valuation stands at around $6 billion this morning, according to CoinGecko. And sticking with World Liberty as we get to our top stories, the Trump family still stands to rake in billions from the token's trading, even as the price falls today. According to the Wall Street Journal, the Trump family amassed as much as $5 billion in wealth after the token opened for trading on Monday. World Liberty's website notes that President Trump and certain family members own around 38% equity interests in World Liberty and receive 75% of WLFI token sales. The White House has told Crypto World previously that the president's crypto holdings are in a trust managed by his children. Meanwhile, Democrats continue to critique the president's crypto ties. California Governor Gavin Newsom has joked that he'd launch the Trump corruption coin meme token in a jab at the president. Next, Crypto.com is partnering with fantasy and sports gaming operator Underdog to bring prediction markets to 16 states. The contracts will be provided by Crypto.com Derivatives North America, an exchange that's registered with the CFTC. Underdog's founder and CEO, Jeremy Levine, joined CNBC's Worldwide Exchange to break down the new partnership.
It's been a lot of interesting moments, right? Elections, some cultural moments, but there's one thing we've learned. Prediction markets are going to be about sports, and sports is what we do best at Underdog. We were built with a really simple thesis in mind, and it was, if we can be the best at building product, we'll build the biggest company in our space because there's so much more to be built for sports fans in America, and that's exactly what we're doing today.
Now, this partnership between Crypto.com and Underdog is part of a flurry of activity in the sports betting space. In August, Flutter's FanDuel announced a partnership with CME to offer contracts for events. And finally, Gemini wants to raise more than $300 million with its IPO. In an S-1 filing sent to the SEC today, Gemini said it wants to offer more than 16 million Class A shares at up to $19 per share. The company could raise $317 million with the sale, and Reuters reports that when all is said and done, the company could be worth more than $2.2 billion. Gemini, of course, weathered the worst of the crypto winter, including the halting of its Gemini Earn product when its partner Genesis suspended withdrawals. The company also faced a $37 million penalty from the New York Department of Financial Services for compliance failures. All right, for our main story, Bitwise released its long-term outlook for Bitcoin last month, and I spoke with Ryan Rasmussen, head of research at the crypto-focused asset manager, about the white paper titled Bitcoin Long-Term Capital Market Assumptions. So Bitwise released a white paper late last month revealing the asset manager's long-term forecast for Bitcoin. The report reveals a target price of $1.3 million by 2035. You were integral in putting together this white paper, and so I'm wondering, how did you come up with that price target? What are some of the factors at play? I'm assuming a big factor is regulatory advancements for crypto here in the U.S., especially because your report notes that these recent regulatory advances are unlikely to be peeled back given Wall Street and Main Street's increasing embrace of Bitcoin.
That's exactly right, Talia. What our team did at Bitwise was we zoomed out and we surveyed the Bitcoin and crypto market. And we said there's no institutions out here putting out long-term capital market assumptions, yet every other asset class has asset managers putting these projections out. And so what we did was we dug into the historical data for Bitcoin. We looked at correlations, we looked at volatility, we looked at returns, and then we looked out into the future and we said, what do we think is going to happen over the next decade for Bitcoin? What trends do we think will persist? What tailwinds do we see? And of course, one of those very strong tailwinds is the regulatory pivot that we're seeing in Washington, D.C. with this new administration, which is a stark contrast from the regulatory environment that Bitcoin's operated under for the past decade, and is very different than how investors have been thinking about Bitcoin over the past decade because of that regulatory environment. And there's a number of other tailwinds that we see for Bitcoin, but regulatory environment is a huge one, as well as institutional adoption. We really had this 0 to 1 moment last year with the launch of Bitcoin ETPs. That was accelerated by the regulatory pivot in DC. We've seen that accelerate into this year. It's why Bitcoin's been one of the best performing assets of the year. And we don't believe those trends are going to slow down. And that's why we have a $1.3 million forecast over the next decade for Bitcoin.
So the white paper stresses that it has become more critical for institutional investors to access high quality data and projections when modeling Bitcoin's role in portfolios. Your analysis has led the asset manager to believe that institutional investors will allocate between 1% and 5% of their portfolios to Bitcoin. How did you reach that conclusion?
Well, every day at Bitwise, we talk to institutional investors. These are RIAs, hedge funds, family offices, high net worth individuals, and the pattern continues to emerge that more and more of these investors are starting with a 1% allocation to Bitcoin as they build their portfolio. And then what we've seen time and time again is those 1% allocations ladder up to 2, 3, 5%. Now, many investors that we're speaking to have a much larger allocation than that, but we believe that investors will allocate somewhere between 1 to 5% of their portfolios to Bitcoin. If you just take a step back and think about how Bitcoin has a 21 million supply, or how Bitcoin has a 21 million fixed supply, and if you think about what a 1 to 5% allocation would be for the 100 trillion institutional investment space, that's 1.5 trillion of additional buying pressure for Bitcoin over the next 10 years. And that's why we think there will be a continued sustained supply and demand imbalance that will drive the price higher.
Now, Bitwise argues that Bitcoin's historical 4-year cycle is no longer relevant given the diminished impact of halvings, the depth of new institutional demand, and regulatory gains. So do you think the halving events will now have a minimal impact on Bitcoin's price?
I do think that's right. If you think about what the halving is, which is a 50% reduction in the new supply of Bitcoin being issued, that happens every 4 years. And by definition, because that impact is cut in half every 4 years, it will be less impactful for the long-term price and supply and demand dynamics of Bitcoin. I think what's more important is the demand side of the equation. As institutional adoption grows, as broader adoption and integration of Bitcoin into the financial system continues to grow, the demand will outstrip supply at a rate we haven't seen previously. So yes, I do believe that the halving will be less impactful, but really it's a story of demand and limited supply already.
Makes sense. Now, Bitwise projects that over the next decade, Bitcoin's compound annual growth rate will be more than 28%, with a volatility of nearly 33%. Your report notes that this shows Bitcoin is both the highest performing and most volatile major asset. Bitwise also points out that Bitcoin continues to have low correlations to stocks, bonds, commodities, and other traditional assets, and notes in the report that, quote, in this scenario, the next 10 years would represent Bitcoin's institutional epoch in which it becomes a mainstream alternative asset that is difficult for any thoughtful investor to ignore. Would you say we're already seeing big steps in that regard, especially with developments like spot crypto ETFs trading in the US and the fact that we now have a federal framework in place for stablecoins and could see some more developments for market structure on Capitol Hill?
I think that's exactly right. For most investors who haven't been paying attention to Bitcoin, it tends to be a story solely about price. And of course, Bitcoin is famous for its large price swings, both up and down. And so most people get fixated on price predictions when thinking about Bitcoin. But we believe what's equally important to investors who are building portfolios are things like correlations and volatility that you mentioned. So we do believe that the volatility of Bitcoin will continue to fall over the next decade, largely because larger and larger institutions are entering the space, because you have deeper markets, which were deepened by the launch of Bitcoin ETPs last January, which are already around 200 billion in assets. And those two factors are what's going to help Bitcoin transform, and what's already helped Bitcoin transform into an institutional asset from a market dynamics perspective. But the regulatory tailwinds that you mentioned are equally important. Of course, stablecoin legislation just was signed into law earlier this summer, and that was a big deal because that's the first major piece of crypto legislation signed into law. But I think what most people are missing when they think about the stablecoin legislation bill, the Clarity Act, the stablecoin legislation bill, the Genius Act, was that it had bipartisan support, and it was the third most bipartisan supported piece of legislation this year. So it's not just a one-time thing that we're seeing with this administration. We're seeing both sides of the aisle support pro-crypto legislation, and we think that trend will persist over the long term.
That's an astute point. Now, there's a whole section in this white paper dedicated to risks for investors to consider. Those include the fact that Bitcoin is a volatile asset with a limited track record. You touched on the volatility just now, and that institutional adoption is in its early days. Can you take us through some of the other risks tied to the cryptocurrency?
Of course, there are risks associated with Bitcoin as there are with other investments. Because Bitcoin is first and foremost a technology, one of the main risks that we talk to investors about is technical risk. What if there's a shock to the technical side of Bitcoin? That could be quantum computing or a number of other technical shocks. Now, we don't believe quantum computing is going to be a long-term issue for Bitcoin. There's already some of the brightest computer science and cryptography minds in the world focused on upgrades to the Bitcoin network that would make it quantum resistant over the next decade. But there are other risks, one of which would be if this regulatory pivot somehow starts to slow, if it really is just a one-time thing, that DC and regulators and policymakers are embracing crypto and embracing Bitcoin. But again, we think that the data around the most recent votes in Congress showing bipartisan support for legislation and for clear market structure, we believe those are trends, that those risks are diminishing over time. And in general, if institutional adoption begins to wane, that could pose risk to these long-term forecasts. But again, we're on the road every day at Bitwise talking to investors. And what I can say from my experience meeting one-on-one with these investors is that institutional interest and adoption continues to grow. And these tailwinds we've spoken about, the launch of Bitcoin ETPs, the flow of capital into this space, the regulatory adoption is only accelerating that interest. And so we think that's a relatively low risk in the long term.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.